Hey there, public employees in Washington. Picture this. You've spent your entire career working hard, saving, then you finally pull the trigger on retirement. Quite a while in retirement, let's say once you get to 75, 80, you experience an event, a long-term care event, where you have to go into a nursing home or other facility, and all of a sudden your savings are draining, your pension is being used faster than you can even imagine, and you're left wondering, what could I have done to prevent this? I've been getting a lot of questions about long-term care, and it's a hard conversation to have. However, it's an important conversation to have with folks about the importance of preparing yourself and protecting your loved ones in the event that you do have a long-term care event. And based on current data, it's more likely than not that at some point you're potentially going to have one. Hey there, my name is Seth Deal. I'm a CPA and financial advisor. I'm also a former city employee, and I love helping public employees in Washington plan their financial futures, including what we're talking about today, long-term care. Long-term care is often considered a hidden threat to your retirement dreams and the planning that you have put in place. Based on recent surveys, 7 out of 10 adults in the United States over 65 will need long-term care at some point. The average nursing home costs are well over $100,000 each year, and that can really just put a serious financial drain on your savings, can put a lot of pressure on your family, and it ultimately makes a hard situation even harder. And so it's so important to understand what your options are in preparing for if you have a long-term care event and what needs to happen. Before we get into how do we prepare for this, let's look at some of the specific Washington related costs around what long-term care costs. Let's say you are fortunate that you're able to stay in your home for a while when you need long-term care. In-home aid is going to run $90,000 or more each year just for in-home care. If you have to move into an assisted living facility, generally those costs are going to be in that $70,000 or more range. And then if you are in a nursing home where you need a high level of care, those costs are often $160,000 or more. One of the things I do when I'm looking at long-term care costs for clients is I go to the Genworth cost of care calculator. And I look at specific locations close to where my clients are, or if they're potentially moving, I look at where they're going and what those specific costs look like. So one of my action items for everyone today is to go out to that Genworth cost of care calculator and get familiar with what those costs for long-term care look like to get a baseline understanding of if you do have long-term care, what's that going to cost? When I'm working with clients to prepare for long-term care, to plan for it and to make sure that risk is mitigated as much as possible, before we talk about any of the insurance options or strategies for preparing for long-term care, the first thing I do is I map out how their cash flow is going to change if they do have a long-term care event. So for example, let's say you had a car payment or you're driving a car, you're no longer going to be able to drive. So you'll need to sell your car and you will no longer have a car payment. So that's one specific example of how your cash flow will change in retirement. For those of you who have someone who's depending upon your pension, you really need to factor in how are those cash flow changes going to impact our spouse or partner, that person that's depending upon our pension. That's really the first thing I do with my clients is I go through it and I create a detailed timeline and scenario of what happens if one of us has to go into long-term care. And then we can talk about how do we protect against that? But first, we want to understand what those changes look like. So let's start with the Washington Cares Fund. So this is a long-term care policy funded by the state of Washington through payroll contributions that all employees in Washington make. You also did have a chance to opt out of this when it was initially put in place. However, let's just for the sake of discussion, let's assume everyone's paying into that. So the maximum benefit for the Washington Cares Fund is $36,500. That number is inflation adjusted. However, compared to in today's dollars versus what those costs for long-term care are, they're really small. It's just a frame of reference. Costs for long-term care are likely $100,000 or more. So that's less than a year of protection under the Washington Cares Fund. Most long-term care events typically last a bit longer than just a few months, 2 to 5 years, generally speaking, is what we see. But that really varies, is really dependent upon each situation. Then we have a traditional long-term care insurance policy. I'm going to be honest, I'm not a huge fan of traditional long-term care insurance. However, it is something you should look at. One of the things I don't really like about the traditional policies is the premiums tend to increase really significantly as you age. And that really can be detrimental to maintain your standard of living. And so that is something to look at and to get quotes on. There are lots of policies out there. And so I would highly recommend anyone going any of the insurance routes to really shop around. Don't just settle for the first one you find. Try to find something that has some form of protection from those premiums not increasing really dramatically. You also want to make sure it has an inflation rider in it. So basically, we'll want to make sure that policy keeps up with the pace of inflation. Generally, that's pretty standard. However, it is one of those boxes you just want to make sure you check. The next option from an insurance standpoint is a hybrid life insurance long-term care policy. And these generally have a fixed premium. I've seen ones that have essentially like a lump sum type premium where you pay $100,000 one time, or you pay $25,000, $50,000 over a handful of years. I've also seen it where it's just a fixed premium, let's say $600 a month for the entire policy term for the rest of your life. So the fixed premium component of those hybrid policies, I generally like more than the traditional long-term care insurance. You want to find a policy that fits your needs the best. And before you settle on a policy, make sure you've mapped out what your expenses and how your cash flow is going to change if you do have a long-term care policy. Typically, those initial numbers that I threw out, that $100,000 or more, typically you don't need to insure for that full amount because you're going to have some retirement income. Maybe it's your Social Security that can cut down on what that insurance need is. So just revisiting that conversation, it's so incredibly important to map out how your cash flow needs change if you were to have a long-term care event, because we might not need that full insurance amount. And now we're going to get into some of the self-insurance type options. So self-insurance or insuring for, again, part of that long-term care costs and maybe doing an insurance policy for a small amount of the cost is oftentimes a popular route to go. With self-insurance, you really want to map out, again, what our income needs and how is our partner, if we have a partner paying on us, how are they going to be impacted? And we can use our traditional savings through our pre-tax DCP or a traditional IRA to pay for long-term care costs. Something else to consider when self-insuring is whether you have a significant amount of home equity in your home. Oftentimes, you can get access to that home equity or potentially sell your house if you were to have a long-term care event. And so oftentimes that can be a way to self-insure without purchasing an insurance policy or earmarking current savings. However, again, we want to circle back to this theme of if we're married or have a partner who's depending on us or depending on that house, what are they going to do? Are they going to need to live in that house, or are they going to come live with us, potentially in some sort of facility and help provide care? And so it's really important to, again, map out how those cash flow needs change if a long-term care event does occur, because there's really no one size fits all. And a word of warning, anyone who says you must buy an insurance policy, I would be very hesitant. It's really important to again, map out your cash flow changes and have a plan for if you do have a long-term care event. I'm all about action and taking action today to protect ourselves and plan for our financial future. So the first thing I would recommend doing is figuring out what's your personal risk. What's your family history of longevity look like? Have you had a family member with a long-term care event or maybe dementia? Figure out what's our risk potentially for having a long-term care event. So that's something we very much want to factor into this situation. We also want to take a minute to just, do we have any existing coverage that we don't know about? So are you paying into the Washington Cares Fund? If so, you're going to have a small amount of long-term care insurance already. So be sure let's just assess, what do we currently have? Or do we have a home with a lot of home equity? Do we have lots of savings? Those are all things we want to think about as we're taking action. Once you know where you're at today, what options you have available, that's where you can then explore, how do we fill that gap or bridge that gap between what we currently have prepared for long-term care if it happens, and what do we actually need? So that's important that we're figuring out, how do we fill that gap that might be there. And once we've figured out what the gap is and explored some options, we can then take action and purchase a policy or kind of earmark some savings. There are lots of different options out there. It's going to really be dependent upon each person. And that's how you create your protection strategy. Thanks for tuning in today. And just remember that having a plan is the biggest step you can take today. There are a lot of mistakes I unfortunately see being made, and not planning is definitely one of those. So I've created a guide that goes through some of the other mistakes I see being made. So check that out in the description below. If you ever want to potentially explore working together, feel free to go to lifefocusadvisors.com.